Hey guys, all right. I will talk about my trade for the day, and I'm going to cover support and resistance levels as a little side topic today. We covered watch lists and we also covered exponential moving averages in my last two videos. So I think today we'll just break it down to some simple, basic support and resistance levels, which are the original indicators of price action. All these other fancy ones: EMAs, SMAs, Bollinger Bands, RSIs. Chandler channels. I don't even know what they are. I'm not going to go through a lot of them because I don't understand them all, but here we go. We've got momentums, we've got oscillators, we've got support and resistance stuff, we've got trend indicators, we've got volatility. I mean, you can go over all of these. You can put every single one of these on your chart. All they're going to do is just create confusion, and they're actually going to blind you from seeing true price action. So that's why I keep it simple. Just like down here on this IMH chart, I keep it simple with just 4 moving averages. I draw some trend lines. I usually have an RSI going down here and volume, and that's it. I need to get better at using the VWAP, but just learning as we go. So I had one trade today. I know I said yesterday I wanted to make 2 trades a day, but I did one trade here. I just don't want to get my account number. There we go. So IDXG. I jumped in for 250 shares. I'm going to keep my share size relatively low for the next bit here until I just get more comfortable trading. I've tried trading 300 and 400 share sizes for quick trades, and I've done okay on them. And I've also, missed stop loss really quickly and eaten, a nice size loss. So the best way to mitigate risk is through your share size and your stop loss. So 250 shares, 10-cent stop loss. Max loss would be $25 plus commissions, so $35. Aiming for 20-cent return, so 2-to-1 profit loss ratio. Some guys do 3-to-1. I find 2-to-1 is pretty simple. If it goes down 10 cents, bail out. If it goes up 20 cents, bail out. Or you could sell half and let the other half ride, but with a small share size, it's not really worth it. So if it goes up 10 cents with 250 shares, or up 20 cents, that's $50 minus commissions. $10, $4.95 a trade. You're left with $40 on a $900 account. So it's all right. So anyways, I was in at let's call it 332, and I was out at 349. This is what I love the best. In at 9:33:55 time, out at 9:34:31. So it's a 36-second trade. You can't beat that for a quick $42. And like I said, minus $9.90 for commissions. So I ended up with $31. And it brought my total up to $981. So super happy about that. Green trade. Would have been nice to get another one, but it didn't happen. I got distracted for the rest of the day. But here's my trade. So me and Lutz were looking last night on the watch list. We do a nightly Skype watch list call. We've just started this week. We Skype each other and we do a screen share and we just talk about what's hot, what moved yesterday, what's moving in the after hours, what Twitter's talking about, what our traders that we follow are talking about, and we just try and line everything up and put together a watch list and follow it into the morning and hopefully make a trade off it. So we had IDXG, KGJI, HTGM, HOS, and PFMT were our watch lists from last night. So IDXG had earnings. This is after hours here. There's all this gray here is after hours. So IDXG obviously had earnings somewhere. I think it was 4:01 actually, right after the bell, and launched up in after hours, smashed into this resistance level, pulled back, and then curled up, broke through. This was the gap up into the morning here, spiked up, hit a high of $4, sold off, came up again, sold off. Couple little bounces on the way down, and so I watched it coming into market open, and I thought, okay, this thing's had earnings. It's a former runner. I've seen it make big moves in the past. I think I actually have a trade on it from a month or two ago that was a red trade, and I just thought, okay, two things are going to happen out of the gate. It's going to sell off quickly, and then it's quickly going to find a floor and rebound from it, or it's just going to launch and keep on going. had these are tops that I'd set, so because it broke out of here, you can see it here. Let me zoom in a little bit more. Because it broke out of here in the after hours and pulled back to this kind of 360 range, up and then came back, fell under 360, but it popped back up and it kind of consolidated just under this 370 level, bouncing off of the 360. Broke out of it again, double topped here at what, 385, couldn't hold it, and then started selling off, stopped, hesitated again at that 370, kind of 367 mark, fell back through, hit the $0.50, bounced off the $0.50, fell under the $0.50, poked its head over it again, and then it seemed a little bit trapped, couldn't get it, fell down even more. I was trying to look over here to see anywhere it kind of consolidates for a little bit. If you look down the line, you can see that acts as a support or resistance level. So I'm going to talk about support and resistance level in a minute, but so we popped back up over here, we sold off, then we kind of consolidated on this $0.50 just for what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 minutes before the bell. So this is just people kind of waiting. The market stopped and just watched this stock to see what it was going to do. Opened up. I believe it's popped up first, and then it sold off, and then it came back up to close just under the $0.50, or under the $0.50 at 350. Same thing. Popped down, sold off. Pushed up, sold off, and then the buyers came in, pushed it back up, and then it sold off again. And I've seen this before. I've seen 1, 2, 3, possibly 4 or 5 red candles head down, and then instantly I usually see a quick rebound. So on this candle, it sold off down to 320, which is a resistance, a support line that I'd already had. I'd had all these support lines already marked up from pre-market and from yesterday's price point. So these lines were already here. So it sold off, buyers came in, pushed the price back up, and then it flipped over to the next candle, and I saw it sell off again, but it didn't hit as low as this one. So I said, okay, this is going to do that same kind of quick red to green move, and you know what, it might launch, it might not, but I wasn't going to hesitate and wait, because this is such a quick move sometimes that you can miss it, and you're always just going to sit there thinking, if only I'd gotten in lower. If only I'd gotten in lower. That's such a bad way of thinking. If only I'd gotten in lower. Sure, woulda, coulda, shoulda would be great. Action talks. So I saw it move, saw this one not come down as low, and when it started to push up, I jumped in. I got in at 330, what was it, 332? Is that what we said? 332, yeah. So this had a low of 325, and it came up to a high of 333. So I got in just before this candle closed, pretty much. So I jumped in, and the next thing you know, this little candle actually gapped up, closed at 333, and it opened at 335, and it just pushed right away. And I was like, fuck yeah. I was pretty stoked, actually. But I knew we had a $0.50 resistance, and I knew we had a previous resistance. So on the way up, it pushed up to 360, and I went to sell at 360, and I didn't get filled. So I canceled my order, and it pulled back a little bit, pulled back just around the 350 mark, and I hit the bid and I jumped out. Because my thought pattern was, okay, great. I wish I could have gotten this 360. That would have been awesome. But right now the stock is going down, and it tried to break over a $3.50 resistance level, and now it's pulling back. So I don't have a lot of patience right now, and I really just wanted to turn a green trade. So obviously it's one of those things where you should have held on to your winners a little longer, but I jumped out at 350, 349 on that little bit of a pullback, because I thought, you know what, it's going to get caught under it. And then it pushed back up to 360. What is it, 365? Pushed back up to 365, and then pulled back to 357, and then here was the next candle. It popped over, opened at 358, and sold off in 1 minute all the way down to 327. So super quick trade. Like I said, 36 second trade. I was on it. My finger was on the trigger. My other finger was on my cancel all order. So as soon as it popped up, my order didn't fill 360. I canceled my order. I put in a new one right away because, look at how quickly, if I hesitated or tried to type in new numbers, it could have popped over to this candle and then fell off, and then it just kept going, and it went all the way down here to $3. So, you got to make sure that when you're doing a quick trade, it's going to be a 30-second trade or 1-minute trade or 5-minute trade. You want to be organized. You want to know where your support and resistance levels are, especially your resistance, because you want to know where it possibly is going to cap out. So look at 367, and it pushed up to 365. So, I mean, I had already had a great line set, and I already knew that the $half was here. So my range was either between here and the $half, or if when it got over the $half, between the $half and 360, 367. So I tried to get out at 360, but I didn't get the fill because the price was moving too fast. I managed to get my fill at 349, which I feel is very successful in the sense that I managed to take a little piece of the profits off the table, and not get caught with a stop loss of whatever, 20, 30 bucks, or break even, or just a pointless trade, or even worse, even a big loss. I mean, I got in at 332. This candle down here, the low of this candle here is 310. That would have been a 22-cent loss on 250 shares. I would have been pretty beat up over that. That's not a lot of money, but it's just the fact that I didn't get it. Anyways, this brought my accuracy on my small trading account to 45%, which also made me really excited. I'm starting to reach that closer to 50 and 60%. My trades are getting tighter, obviously. My reaction time is getting faster. My watch list is getting a little bit better. So I'm feeling progression. I could have a red trade tomorrow, who knows? But you know what? I'm sitting on 2 red trades or green trades for the week right now, and that feels pretty good. So it's not a lot of money, but the fact that I got in and out is great. And this is a scalable skill. I'm trading 250 shares right now. Soon I'll be trading 300 shares, and then 400, and then 500, and then 600. And hopefully I'll be able to comfortably hit buy on 1,000 shares on a quick move like this and take off a quick $100 because it went up 10, 20 cents, right? Or $200. I mean, my goal is $200 a day right now. Well, not currently, but I mean, my future goal is to make $200 a day consistently throughout the week. So maybe that's $400 on one day and loss of $200 on another day, but I'd like to average $200 per day for the week. That's, give or take just over $50,000 a year. That'd be a nice little side income. This was 1, 2, 3, 4, 5 minutes into the market open. I mean, if you could do this, if it only took an hour and you can make $200 in the first hour, still work a normal job, or maybe quit your job, who knows? But the possibilities are there. Just some dedication, some time, and some focus, and some studying and practice. Practice, and hopefully you don't pay too much in market tuition, which is a loss. Market tuition is a loss, so you can get a lesson for anybody that has never heard that term. So I'll just zoom out a little bit, and I'll show you why I kind of pick these support and resistance levels. And I'll talk about support and resistance. So support and resistance levels are a number of things. One, they're psychological. Everybody wants to sell at $10, or everyone wants to sell at $5. I bought a stock at $4.30. I want to sell it at the $5 mark, or I want to sell it at the $4.50 mark. So the whole dollar and the half dollar are very psychological resistance levels. Same goes on the way up as on the way down. I won't sell it till $4. If it goes lower than $4, I'll sell, right? So that mentality is strung all throughout the market, and it's kind of embedded on us for some reason. I don't know if it's an OCD thing or just, we like whole round numbers, but we just see those as complete almost. So $3.50 is complete, $4 is complete. If it gets over $3.50, I'll sell it, or maybe I'll hold on to $4, right? But the thing is that support and resistance levels can be based off of any sort of price action. They occur and they're created when there's an imbalance between buyers and sellers. So down here, consolidation levels, stuff like this is considered consolidation, where it just stays tight and range bound. These are just sellers. I mean, these are still support and resistance levels, but for the most part, there's not a lot of volatility. There's not a lot of price action. These are just buyers and sellers exchanging trades, and wanting to keep it, people don't want to pay too high. People don't want to pay too low. They don't see the price moving very fast. There's not a lot of volume coming in. So this just keeps, this makes the world go around, essentially. This is just keeps exchanging hands. Some of these people, sure, might be holding up here and they want to sell their shares down here, and some people might be holding down here and they want to, or sorry, they were holding up here, they were holding up here, they're holding up down here, and they want to sell their shares up here, or they lost their shares up here and they want to buy some down here. Wow, that's a mind fuck. Anyways, so imbalance of buyers and sellers. So down here we had a lot of buyers. Buyers came in. There was good news, good earnings. Buyers came in, pushed the stock up to this point, and the sellers took over. Could be these buyers up here decided, hey, you know what? We're going to get rid of our shares, take some profits, and the sellers took over and pushed this price back down. Then buyers found a price point again. They found an entry where they want to get back in, started buying, and the buying rush comes in. I mean, this is after hours. This is not the best example because there's not a lot of volume, but these are buyers that want to get into the stock. They want to get in. Then you have the morning, pre-market. We get up to the top, $4. You wake up in the morning, you bought this stock down here at $3.30. You wake up in the morning and it's $4. I mean, some people want to hold forever. My mentality is, wow, I just made 70% per share. I want to get out. So that's what this is. That's that emotion, and that's these sellers taking over. I want to take some profits, and they push the price back down. Here we have a little bit of consolidation where buyers and sellers are a bit unsure of what they're going to do. But again, buyers took over, pushed the stock up. Buyers can also be short sellers because you have to buy stock to cover your short sale. You have to buy your stock back that you borrowed originally. So short sellers can create buying pressure. Unsure about covering aftermarket after hours and pre-market. I'm pretty sure that you can't cover during after hours or pre-market, but I will look it up. It's not off the top of my head. I will look it up and I will get back to you in the next video. So again, sellers took over and down we go. So at all of these points, these are all turning points. And every one of these turning points where there's an imbalance, the balance corrects itself or the balance completely flips. So we had buyers on the way up and sellers took over. All of these points will be some sort of resistance or support level, depending on which side of the tracks the buyers or sellers made the exchange of power, essentially. So sometimes it can be very defined, like these big points up and then straight down, and other times, you know, like I said, down here in consolidation, it's still the same thing of buyers and sellers exchanging hands, and one person tries to overpower the other. But for the most part, this is just basic price action. There's not a lot of volume. You can see all the volume was in the first bit of action. So I like to go through in my pre-market, and I like to find anywhere there's a top and lay out a line, because as soon as it hits a top and pulls down, that can act as a resistance point. Now it's got to fight to get back up through it, and here we go. It broke up through it, carried on, didn't even hesitate really, a couple little hesitations here, and then it pushed up again into the morning. Once you break through a resistance point, that resistance point now acts as a support level. So this pushed up, didn't make it, came around, curled up, broke through, and ignore all these lines. This price action did what it was going to do. And then here we go, look at so where I bought came down to that previous resistance. That previous resistance now acts as the support level. It sold off in the morning, came down just above it, bounced off it, pushed up, and then it came into this resistance. So this was the window. This was, I mean, the $0.50 is in there, and you have to take that into account. But realistically, let's see this out here, is the window of profit was right here. Was on this move, seeing this push up, saw it hit this support level, and it smashed into the resistance, and that was it. It sold off and it couldn't hold it, and down it came. Support and resistance levels are not an absolute. Just because it's $3.50 doesn't mean that $3.50 is the support or is the resistance. The support could actually be at $3.47, and it could move, because what it is buyers sitting there pushing the price up, wanting to get into the stock, and sellers not wanting to sell it. So buyers can lower their they can say, oh well, they see the stock coming down, they say, hey, maybe I can get a little cheaper, maybe I can get a little cheaper, maybe I can get a little cheaper. So they'll keep lowering it a penny, a penny, and could bring it down to $3.43. Same thing with sellers. On the top side, the selling pressure on the resistance side, stock can be flying up, and they can think, hey, I could get this a little higher. I could sell it a little higher, and they keep moving their price up from $3.50 to $3.51, $3.52. So whenever you think about a support and resistance level, think about 5 cents either way is what I like to do. So we've got 320 here. Well, it didn't come all the way to 320 today. It came down to 321. So you've got $3.50 here. Well, look at this on the other side. It came down. This is the resistance. Kind of bounced around, pulled back, and then it finally broke through. But it didn't break all the way through. It kind of broke through, hit the 60s, and it kind of meandered through on this level. I also like to look at magnet levels, and that's where a stock will kind of just flow through. You could draw this right in the middle of this price action, and you'll see that the magnet level is kind of like 280. As much as the support is 277, 280 is kind of the support stroke resistance, because this is a price point that the stock and the price action is kind of going up and down and down and up, and it's flowing right through this 280, looking to try and get out of it. And it doesn't really get away from it until the last 20 minutes of the day, 30 minutes of the day. So that's what I got for support, resistance, and my trade this morning. I'm still learning this, and obviously it's hard to teach. I understand what it means, but trying to organize my thoughts and get it out there for you guys isn't always the easiest for me. But I'm always open to answer any questions or look up any information. Everything's on Investopedia, Warrior Trading, Investors Live. Lots of great resources out there to learn this stuff. I mean, that's where I learned, internet. Just going to quickly cover IMH. Michael, one of the guys in our group, called this out yesterday. Acreage Farms, I think it is. Average Farms. I don't know. I'm not the big fundamental guy, but one of their farmers got their LP, licensed producer. I think they're 41st now, 41st licensed producer in Canada. They got it yesterday. He called it out. A bunch of guys and girls in our chat room got in the 130s. It gapped up overnight. It halted, I believe, in the morning when they did the NR news release, and then it was at $1.41, I think, when it started the halt, and then it gapped up, opened at 160, flew up, smashed into this resistance at $1.80. I mean, that's a clear resistance at $1.80. Pulled back down here to $1.67, and then came up, fought the little. This is a little fight here, trying to get over the $1.80, and then popped up to a high 197, and then it didn't. That was it. It just kind of ran out of steam. It sold off after that, but it had a really good catalyst, and it's going to be well on its way to be a great stock. So it didn't fall off. It wasn't a pump and dump. It wasn't it wasn't full of hot air. It came down here, kind of found a new moving average. We thought it was going to hold right here. I was looking for a bit of consolidation and then maybe a push back to high day. It didn't do that. It kind of slumped down a little bit lower. Some profit takers from around here decided, okay, I'll take my profits. But it held a nice, solid kind of magnet in that 165 range. We saw it kind of 169 down to 163. A couple guys made a few scalps, and then it closed nicely, closed nice and flat. So I'm expecting a 10-cent gap up tomorrow, probably 5-10 cent gap up, because we were all interested in this immediate price action, but some other investors, I'm sure, are going to come in and see this and hear about this company. And I wouldn't be surprised if we saw a little push, 10-cent gap with a morning sell-off. So that's what I got for coverage on the MJ sector, my trade, and a little bit about support and resistance levels. So again, if you have any questions, feel free to ask me. Like and subscribe to the channel would be appreciated, and I'll see you guys later. All right, bye.